We continue to watch oil futures following this weekend's nuclear deal with Iran, but some are questioning whether it will have any impact on oil production. For more, I want to bring in Larry Shover. He's Chief Investment Officer at SFG Alternatives. He joins me now from the CFE. Larry, thanks for joining us. So we saw this sort of knee-jerk move lower in the oil markets yesterday, right after the news of the interim deal. Do you think markets oversold?
Well, I think they did oversell. But let's keep in mind that there's a little bit of a run-up in the oil price preceding that knee-jerk reaction. So for that to happen, not a big deal. But I think right now the markets are back to normalcy, realizing that this really is a short-term impact on the oil price.
What price impact do you think that the deal should have then on Brent, both in the short and longer term?
Well, I think longer term, it's a tale of two cities. I mean, look at Brent. Brent is over and yet undersupplied. I mean, the global balance picture hasn't been better in a long time, so it's oversupplied. But yet there still continues to be that supply disruption from Libya, Algeria, Nigeria, etc. On the other hand, it's fascinating to me when you look at WTI. It seems like the market has forgotten that drawdowns could happen so quickly out of Cushing, Oklahoma, especially when we have Seaway, XL Keystone pipelines coming online. It's amazing. I think the WTI-Brent spread will narrow and narrow considerably.
All right, well, I'm glad you brought up Cushing. So turning here to the U.S., you have what you call a super congestion thesis. Explain to me what exactly that is and what kind of impact you think it's going to have on the price of crude.
Yeah, I do think long-term or maybe intermediate term, we'll see the price of oil, WTI, rally because we are super congested. Refineries are not online, but once they get online and get rid of all the light sweet oil that they're importing right now, we get drawdowns, magnificent drawdowns from Cushing through these pipelines. We're going to see that there is a deficit of oil sooner than later, and we will see it rally. I do think we'll see the spread narrow as well.
Are you not more concerned, though, about refining capacity? Do you think all these refiners are ready to come back online? Because we are facing a supply glut.
Yeah, and that's a great question, and I think that's what's keeping oil where it is today. It's like, I don't think the market gets fooled by a whole lot. And my thesis, hey, the market's not fooled very often. And I think, yeah, the refineries can't get online quick enough, and my thesis is that the refineries do get up and there's no problem. So we'll see what happens, but I'm still very bullish on WTI.
All right, and Larry, just to move it back to Iran for a second, say we do actually get to the next step of the deal. You know, yes, Iran has the world's fourth largest proven reserves of oil, but after years of underinvestment, a lot of people say they can't just simply flip the switch and turn back on all the taps and get that supply online. What kind of impact do you think getting Iranian supply back online would actually have on the oil markets?
Well, I think what it will do, especially in Europe and other parts of Africa, et cetera, is just going to make the case more balanced. The supply scene will be more balanced, a much more healthy market for Brent, and in turn, that's not going to affect WTI as much. But when it comes to Europe, the whole global macro scene will be a lot more balanced than it ever has been.
All right, Larry Shover, thank you for joining us. We will be back again on the markets in 30 minutes. Market Makers is up next.